Okay, so we have completed our adjusted trial balance, and now it's time to do financial statements. And what you're going to find is it won't be too difficult to prepare financial statements when you see the accounts in just perfect order. And just to be clear, we do not need any of these numbers. We don't need any unadjusted amounts. We don't need the adjustments. We are working purely from our adjusted trial balance. So these are all the numbers that matter. And in fact, I just sort of quickly did some photo editing. You'll see that it's rough, just to edit that middle part out. So I'm going to work from my adjusted trial balance, and I just cut out the sort of left, those middle two columns, I guess. So we're going to prepare an income statement. You all recall that an income statement is the summary of revenues and expenses. So here's our income statement information, just sitting right here, right at the bottom. Right, we've got our security revenue, we've got all of our expenses. Let's go. Let's prepare an income statement for this company. I forgot the company's name. I got to scroll a long way over to find it. NetLock Security, and it's a June 30th, 2024. Year ended June 30th, 2024. Income statement. So let's go. Name of our company, NetLock Security. Name of the statement we're preparing, income statement. Statements get dated for the year ended, for the month ended, for the quarter ended, but this is for the year ended. June 30, 2024. Okay, remember what this is. It's a summary of revenues and expenses, and what we find is revenues minus expenses equals the profit or the net income. I'm going to highlight a couple of expenses here. Interest expense is a non-operating expense, so we'll treat it differently. Income tax expense is also a non-operating expense. It'll get treated differently. So we'll just list our other expenses, though, as we see them. So we have revenues of, well, the one revenue category, or the one item under the category of revenue, is security revenue, $499,000. Then we have our operating expenses, and under operating expenses, we'll just go through all but the ones I've highlighted. So salary expense, $321,500. Depreciation expense, $21,400. Supplies expense, $4,700. Repairs expense, $17,000. Insurance expense, $93,33. Rent expense, $60,000. Our total operating expenses is our $321,500 plus $21,400 plus $4,700 plus $17,000 plus $93,33 plus $60,000, $433,933. So that brings us down to our operating income, our income from operations. Operating income, $499,000. Our total revenue minus our operating expenses, $433,933. Oops, I got one too many threes in there. $65,067. Now we have another expense. Other revenues and expenses, and we just have other expenses, and it is interest. Interest expense of $1,250. So $65,067 minus $1,250, $63,817. And that is our income before tax. Now we have income tax expense. Our income tax expense, $7,000. $63,000 minus $7,000. It's going to be $56,000. $56,817. This is the bottom line of our income statement. This is our net income. We know that this company made $56,000 in profit this past year. $sign at the top of each column, $sign beside the bottom line, and there we have it. Our income statement is in the bag. This went a lot more quickly than if you go back to chapter 1 and look at our financial statements, and the reason is it's in nice order. And the other reason is because we've done it a few times. So my expectation is the income statement isn't a totally foreign concept to you. Okay, let's move over to our statement of changes in equity. We're looking at these three accounts being the key drivers of this. Common shares, retained earnings, and we know that dividends are going to come up here as well. So let's do it. Name of our company, Netlock Security. We're doing a statement of changes in equity. And this gets dated just like the income statement for the year ended, and then the date, June 30, 2024. So we list our equity accounts, and as we've talked about a few times in our intro class, we really only have the two to worry about, at least for now: common shares and retained earnings. And we'll do a totals column as well. And then we say, how did these accounts change? So what was the beginning of the year? If the end of the year was June 30th, the beginning of the year was, I can't do the math in my head, July 1st, 2023. We are making a bit of an assumption that these balances are July 1st, 2023 balances. Reasonable assumption in the absence of any other information. So we'll take our common shares of 40 and our retained earnings of 87. 40,087. We could double check that ourselves, but normally a bookkeeper is not going to enter in any transactions that hit common shares or retained earnings. Maybe if there's common shares issued, that might be off, but we'd have to look into that. Okay, so July 1st, 2023, we assume there's no common shares issued or repurchased, but retained earnings is absolutely impacted here. In fact, it might say in the question, I'm going to just double check it doesn't say in the question about, assume no common shares were issued during the year. So yeah, we can assume that those common share balances is from the beginning of the year. Okay, so common shares didn't change. Retained earnings goes up by the amount of the net income. Our net income comes from our income statement, $56,817. That just goes up there. $56,817. That's our total net income. And we deduct our dividends. What were our dividends? They were $10,000, just highlighted there in the adjusted trial balance. So I'll deduct dividends of 10. Get rid of that arrow. So where does that leave us? Well, let's see. Our ending balance, our June 30th, 2024 balances are as follows. Common shares didn't change, it's 40. Retained earnings goes up by 56 and down by 10. 87,000 plus 56,817 equals minus 10 equals 133,817. 40 plus 133 is 173,817. Double underlines across the board, $signs at the top and bottom of each and every column. And there we have it. We have our statement of changes in equity. We're just going to carry right on and prepare a balance sheet. So let's do that. Name of our company, Netlock. I'm actually going to give myself a little more real estate here. Netlock Security. Balance sheet. And balance sheets just get dated. This gets dated June 30th, 2024. I'm going to pull over my this thing, copy it over, and just paste it. Where's my heading for the balance sheet? There it is. It like disappeared there for a moment. I'll paste it over here. Yeah, just so I can have it off to the side. That's good. Okay. I can see in the video it's going to be, my head's going to be blocking some of the view, but I don't think it's going to block any of the relevant balance sheet numbers. Let's get going. So assets on the left, and the good news is a balance sheet just lists things in order. Here's all my current assets: cash, accounts receivable, supplies, prepaid, insurance, and in fact, that's the order I want to list them here. So that's my current assets. Let's list them and just copy the numbers over. Current assets. We have cash. We have accounts receivable. We have supplies. And we have prepaid insurance. So for cash, $38,000. For supplies, or for accounts receivable, pardon me, $16,000. For supplies, $300,000. And for prepaid, $18,667. My total current assets are 38 plus 16 plus 300 plus 18,667, 72,967. 72,967. Let's move over to our long-term assets, which we know consists of the computers. And we have, let's see, we have computers and we have AD computers, and we know what to do with that, right? At the bottom of my page here, I'm just going to do it. I'm going to say computers minus AD computers equals computers net. The net book value of our computers is the computers minus any depreciation. So 214,000 minus 67,400 equals 214 minus 67,400 equals 146,600. That number is what goes on the balance sheet. Computers net 146,600. So our total assets, because that's the total long-term assets, put a little star there, show how I calculate it. 72 plus 146, so add that to 72,967, 219,567. There we have the asset side of our balance sheet, $sign at the top of each column, $sign beside the bottom line, and the assets are done. Let's move over to liabilities. Liabilities should be right below there. There's our accounts payable, our salaries payable, our interest payable, and our unearned security revenue. And actually, come to think of it, I think the note payable was current. There's a little note about the note payable. I was thinking, oh, note payable will be long term, but it says the note payable, the note is expected to be repaid in late 2024. Well, if our balance sheet is dated June 30th, 2024, guess what? The note payable is current. So these are all current liabilities. So here we go. All of these are current, even the note payable. So let's list out our current liabilities then, which again is all of them. I've somehow zoomed in a little tighter than I wanted to be. I think that's good. So under current liabilities, I've got accounts payable, $8,000. I got salaries payable, 1,500. I've got interest payable, 1,250. I've got unearned security revenue, $5,000. And I've got a note payable of 30. $8,000 plus 1,500 plus 1,250 plus 5,000 plus 30,000 is 45,750, and that is our total current and actually total liabilities. So I'm actually just going to note this as total liabilities. It's such a key number, and total current liabilities is the same as total liabilities. Let's just call this our total liabilities, which also happens to be our total current liabilities. On to shareholders' equity. Shareholders' equity should be dead simple because I just did a statement of changes in equity and I just take the numbers straight off of there. Common shares 40, retained earnings 133,817. I got to remember that number, 133,817. Our total shareholders' equity, 40 plus 133,817, is 173,817. So our grand total then, our total liabilities and shareholders' equity, I got my fingers crossed here. I honestly don't know. When I do these live, sometimes I get them wrong. 45,750 is my total liabilities. My total shareholders' equity, 173,817. 219,567. Oh, phew. 219,567. Guess what? Assets equals liabilities plus shareholders' equity. Whew. I don't know what the relieved emoji looks like, but I'll just give a happy face emoji. Dollar signs at the top of each column and at the bottom line of the statement. And there we have it. We've prepared a nice set of financial statements for NetLock Security. That's all for this video. In our last video in this group for this problem, we're going to learn how to do the all-important closing journal entry. Stay tuned.